my name is Chen, and in this presentation, I will mainly walk you through the methodology and models I employ to identify and predict the fraudulent activities in financial market. And here is a table of contents. So our journey today will begin with the introduction and some essential backgrounds on the topic, followed by a real-world example of palm activity. To illustrate the issue at hand, I will then review relevant studies in the literature review before diving into the market features that are crucial for detection. Next, I will walk you through the methodology and the data that I use in this analysis, including the statistic analysis of the key matrix. We will explore the feature engineering process that was essential in refining the data, followed by the model training and ongoing hyperparameter tuning efforts. I will then discuss the future work of my project and see what would the expected result in might have. So let's talk about the background first. Cryptocurrencies have revitalized financial markets, offering benefits like transparency and borderless transactions. However, they also face significant challenges, particularly the issue of market manipulation through pumping. This practice involves artificially inflating a cryptocurrency's price through coordinated buying, often leading to a pump and down scheme. The manipulators use social media to spread false information, drawing in unsuspecting investors and driving the prices, and only to sell off at a peak, causing prices to crash and leaving others with losses. So detecting and preventing such schemes is crucial for maintaining market integrity and investors' confidence. In this study, we will explore methods to identify these fraudulent activities and discuss ways to enhance the security and reliability of the crypto market. So the pump and down scheme can normally consist of three main phases. The first one is accumulation, the second one is pump, and finally dump. So in the accumulation phase, offenders who are planning to create a pump and down schemes start buying the targeting coin in a way that doesn't significantly increase the price. So at this phase, they may take days to months, depending on the coin's trading volume. During this phase, a substantial percentage of the available coins will be stored in the wallets of these offenders. So next comes the pump phase, where the offenders use social media platforms such as Twitter, Telegram, and Reddit to influence cryptocurrency investors. So they spread rumors trying to convince people that the target coin will surge in a volume due to various factors. As a result, some investors are deceived by this news and start buying this coin, inflating its price. The final phase is the dump, where the offenders begin selling their coins after making survival 100% in profit, selling as much as they can at a peak. Eventually, the price drops below its pre-event level, leaving most of those who bought during the pump phases they hold the worthless coins. So let's see a specific example of the pump activity. So this pump and dump events organized by a Telegram group, a Telegram channel called BM's Crypto Pump Signals, which has more than 40,000 members. In these groups, they organize pump and dump events on three exchanges, Phoenix, Quant, and Beyonce. One of the latest pump and dumps by this group was the BAR pair with USD. They started by sending messages in the Telegram group with the first message usually containing details about the date, time, exchange, pairing, and expected return. And after this announcement, they sent a message highlighting their previous pumps and the profits members had gained to encourage the participation in the events. They also provided some instructions on how to buy and sell coins on the specific exchange. Finally, they began sending countdown messages, and at a scheduled time, they sent a picture with the currency name, and the screenshots are shown in figure 3, and the name of the target point shown in figure 4. And next, I would like to briefly touch on some significant studies that have greatly contributed to our understandings of predicting and detecting the pump and dump activities in crypto markets. So I'll just highlight the points, and you can take a moment to read it. And next, I'll briefly cover a few more important studies that delve into the role of social media and network structures in detecting and understanding the pump and dump schemes. Yes, so for the data preparation, firstly, I identify survival channels on Telegram that are still organizing pump activities, and I selected 4 of them. I manually record a total of 242 pump events from July 12th last year until now. So for these events, I documented the dates of the pump, the channel, the exchange, and whether the pump was successful, and reports about the peak return. So for the cryptocurrency involved, I use various API to obtain the open price, highest price, lowest price, close price, and wallet data, and the market capitalization for the specific pump dates, as well as these data for different time windows before the pump. The time windows include 1 hour, 3 hours, 6 hours, 12, 24, 48, 16, and 72 hours. So as mentioned in previous literature, the organizers tend to accumulate coins gradually before the pump. So analyzing data from different time windows before the pump is really crucial. This approach can help us effectively identify which coins are likely to be pumped. And next, I use the conjugates API to retrieve the list of cryptocurrency ranked by market cap. Through study the pump coins, we found that most of them have a market cap between $1 million and $2 million. So I collected all tradable coins within this market cap range. So for each pump date, I gathered the same market features for all tradable coins. Finally, the final data set consists of the market features of cryptocurrencies that were pumped and those that were not pumped on different pump dates. So after collecting the pump activity data, I conducted a statistical analysis. Contrary to the assumption that pumps should spread across different exchanges to avoid detection, the data shows that organizers typically concentrate their efforts on 1 or 2 exchanges. These strategies lower the entry barrier for the participation, making it easier to join this pump activity. Exchanges are usually only changed if the primary one is compromised, such as being under attack or showing the unusual volume spikes that could raise suspicion. So in such cases, organizers may temporarily switch to another exchange to continue the pump. Next, I conducted a statistical analysis of the number of pumps, the average days between pumps, and the reported peak return across different channels. We found that 3 channels typically follow a weekly pump cycle, often scheduling activities on Sunday afternoons or evening, likely to attract the participants who have more free time. However, you can see the crypto pump signal channel operates more aggressively, with pump occurring every 1 or 2 days and substantial reported peak return. This suggests a strategy focused on rapidly increasing prices and maintaining engagements through the high-frequency activities. The frequent pump and higher returns likely contribute to a sense of ongoing success, boosting the trust and participation within their community. And next, I analyzed 4 channels based on their subscribers' average views for the pump announcements and success rate, while the other 3 channels had a daily subscriber with exit rate of about 3%, but crypto pump signal grew its follower base by 5% daily. Despite not having the largest subscribe base, crypto pump signal channels show higher engagements with more views and comments on pump announcements and higher peak returns. This could be due to their strong organization and the trust they have built, leading to more active participation and better returns. This success likely encourages participants to start and recommend these channels to other investors. Interestingly, despite having the lowest success rate, CryptoPunk signal participants don't seem concerned, as failures usually just result in postpone rather than losses. So to confirm whether the peak return of CryptoPump signal is a consistent outcome or simply due to outliers skewing the average, we plotted the peak return for each pump across the 4 channels. The results show that the peak return for CryptoPump signal was indeed significantly higher than that of the other channels. These findings further support our previous hypothesis that CryptoPump signals consistently outperforms in organizing pump activities and achieving higher returns. So, while analyzing the pump cryptocurrencies, we found that although most cryptocurrencies were only pumped once in the past year, a significant number were pumped multiple times. Specifically, the FL Crypto Pumps channel conducted only 50 pumps activities last year, but 21 of the selected coins were pumped more than once. This pattern suggests that they might have a preference for certain coins, or possibly they possess more detailed information about these specific cryptocurrencies. Additionally, we conducted a hypothesis test on the return of the same coins pumped by different channels. We do the hypothesis test that the return 1 hour after being pumped will be the same, but the results show that we could not reject this hypothesis, indicating that not significant difference between them. Therefore, it's plausible that despite these pump activities occurring at different times and being organized by different channels, but the channels share a level of homogeneity. This homogeneity might arise from similar organizers using comparable strategies and algorithms for selecting cryptocurrencies to pumps. It is worth noting that there are ongoing studies using network analysis to further explore the organizational structures behind pump activities. These studies aim to shed more light on how these operations are coordinated across different channels. However, this line of research extends beyond the scope of this project, so I will not delve into further here. And additionally, to further investigate what drives peak return, we first filter out channel with fewer than 5 pumps on a specific exchange, and then calculated the correlation between number of views in pump announcements and peak return. Interestingly, we found the counterintuitive results similar to what was observed with Java. Subjectively, we might assume that more people who read the pump announcements, the more likely they are to participate the pump activities, leading to higher return after the pump. However, this is not the case. The majority of people, even if they read the pump announcements, do not really participate the activity, reflecting their risk aversion, probably. Even though the channel may report a higher peak return, most participants do not achieve such higher returns. If they are not professional cryptocurrency traders, most of them are likely to incur significant losses. So to provide a clear view of the channels in the close price and volume before and after pump, I use Yahoo Finance to obtain data for the minutes level, like 5 minutes, 10 minutes, and 30 minutes following two recent pump activities. This allows us to thoroughly examine the three phases: accumulation, pump, and finally dump. So this example presented here is a pump activities organized by the crypto pump signal on June 16, 2024 at 6 p.m. involving a coin called Toki, which had a market cap of around $5 million at the time. From the charts on the left, we can clearly see that in the 12 hours leading to the pump, both the close price and volume remain almost unchanged. It was only at the pump time that a large number of investors began trading, causing the volume to increase by about 6 times and the price to rise by 7 times. However, within less than 10 minutes, the price dropped back to just twice its original value, and within 30 minutes, it's nearly returned to its initial level. So from this analysis, we can conclude that this was likely a successful pump activities, although the volume significantly increased in the hour before the pump, possibly because some smart investors anticipating which coin should be pumped next. The overall change was still minimal. The short-term return in the final 5 minutes still reached 200%. Additionally, we observed that when the coin started to dump, the volume almost dropped to zero, indicating that investors were unwilling to immediately sell at a loss, possibly waiting for the next pump on the same coin. This finding is consistent with the conclusion from the previous study in the literature review part. So for comparisons, I analyzed another recent pump event involving the cryptocurrencies MBLK, which was organized by the same group, Crypto Pump Signal, on June 13, 2024 at 5 p.m. At that time, the cryptocurrency had a market cap of approximately $2.5 million. Unlike the first example, this pump was relatively unsuccessful. We can observe that in the hour leading up to the pump, the trading volume steadily increased, which caused a significant drop in the price. This pattern suggests that more investors may have correctly anticipated the pump. The return chart on the right shows that within the 2 hours before the pump, the return reached as high as 40%. However, during the last hour before the pump, the return turned negative, dropping to over negative 15%. This implies that many participants likely predicted which cryptocurrencies would be pumped and bought in advance, only to sell off early when the price began to rise. So on the day of the pump, Although both the trading volume and price surged, the involvement of many early traders created liquidity issues. Consequently, the participant peak return was not achieved during the brief 5-minute window, leading to a conclusion that there was a relatively unsuccessful pump event. So in the next session, I will walk you through the feature engineering process I have undertaken in my analysis, explaining the rationale behind each feature and its significance. So this is some examples of the features after doing the Box-Cox transformation. So start with the feature pump again. This is a feature that indicates whether an asset has been evolved in previous pump. This feature is crucial because assets that have been manipulated in the past are more likely to be the target again. Next, the close on dates feature represents the closing price of the assets on the specific pump date. This is the fundamental features that provides the market value of the assets at the end of the trading day. Volume on dates and market cap on day features are also key features. The former shows the trading volume on that dates, and the later represents the total market value of the assets on the pump date. Certain changes in this matrix can signal unusual market behavior, often linked to manipulation activities. We also include open, high, low, close price, and volume matrix across various time intervals, as what I've mentioned before, ranging from 1 hour to 72 hours. These features allows us to trace price movements and trading volumes over different time scales, providing a detailed view of how the market behaves before pump. And next, the rate of change feature measures the speed of price changes over 1, 3, and 6 hours. These are crucial for identifying momentum in the market, which can be a sign of manipulating activities as well. Next, the rolling volatility is calculated over short intervals like 1, 3, and 6 hours to capture periods of market uncertainty. High volatility often indicates that something unusual is happening in the markets. And next, the simple moving average SMA and exponential moving averages futures help us smooth out price data and detect underlying trends. While SMA provides an overall trend, EMA are more responsive to recent price changes, making them useful for spotting sudden market movements. And VWAP, volume weighted average price, combines prices and volume data to give us the average price of the assets over specific time intervals. This matrix is particularly useful for understanding the general direction of market sentiment. We also use the RSI, Relative Strength Index, which measures momentum over 12 and 24 hours. RSI helps identify whether an asset is overbought or oversold, indicating potential reverse to price direction. Next, the Hertz exponent provides insight into the market's long-term behavior by indicating whether the price trend is likely to continue or reverse. It's a key feature for assessing the persistence of trends. Finally, we include the entropy, which measures the level of unpredictability or randomness in the price data. High entropy might signal that the market is behaving in an irregular manner, which could be a red flag for market manipulation. So in summary, this feature together provides a comprehensive view of the market behavior, helping us to identify and predict up and down events with great accuracy. So in the process of data analysis modeling, it's crucial to pre-process features to improve model performance and prediction accuracy. In this case, I applied the Box-Cox transformation to enhance the distribution of feature data, making it more suitable for model training. Let me explain why this transformation was necessary. So the Box-Cox transformation is a powerful tool, especially when dealing with features that do not follow a normal distribution. In our original data, many features exhibit significant skewness, where the variance of the features changes across its range. Such issues can lead to a poor model performance because the model struggles to capture the true relationship between these features and the target variable. The Box-Cox transformation adjusts the distribution of the data, making it more symmetrical and reducing variance inconsistency, thereby helping the model to better leverage these features. And you can see the graph. On the left-hand side is the first one is the pump again, market cap on dates and so on. But often of their correlation coefficient is under 0.5. And for on the right-hand side, you can see after doing the Box-Cox transformation, the overall correlation coefficient increased, and you can see there are many other features that contribute to this classification problem. And next, due to the existence of different window size among the features, as well as the transformation of the original OHLCV data into various derived features, many features must exhibit strong correlation with each other. So these higher intercorrelations can lead to redundancy, where multiple features are essentially covering the same information. So to address this issue and reduce the dimensionality of our feature set, I applied the principal component analysis. The goal of PCA is to identify a smaller set of uncorrelated features or the principal components that can effectively explain the variance in the target variable. In this case, the variance related to pump events. So after performing PCA, I ranked the principal component based on amounts of variance they can explain. By analysis, the elbow plot, which displays the explained variance as a function of the number of components. I determined the optimal number of components to retain. The elbow point in this plot, where the experience variance starts to level off, indicates that the first 6 principal components were suffering to capture the majority of the variance. Thus, we selected these top 6 principal components for further analysis and modeling. This approach not only simplifies our model by reducing the number of features, but also ensure that we retain the most informative components that are crucial in expanding the variance in pump events. So after doing that, I trained the model. I proceed to train 5 different models, given that some of this model involve the time series data. So I choose to use time-based splitting instead of cross-validation to prevent data leakage from future information. Specifically, the training was conducted using a total of 10 time splits, ensuring that the model would test on future unseen data, closely minimize the real-world scenarios. So since pump detection faced a significant class imbalance issues, where the number of pump instances is far fewer than the non-pump instances, so I employed SMOTE to address this imbalance during the training process. This technique helped balance the data sets by generating balanced samples for the minority class, thereby improving the model ability to detect pump events. So the model trained include XGBoost, random forest, SVN, KNN, and LR, the logistic regression. And the initial training results indicating promising performance across this model. After completing the initial training phase, I'm currently conducting hyperparameter tuning for each model. This tuning is essential to optimize the model performance by fine-tuning the parameters. Given the extensive number of hyperparameter and the large data sets, this process requires additional time to finalize this result. Yeah, however, this initial training has established a strong foundation for achieving optimal outcomes. And what I'm doing now is to the hyperparameter tuning. And I just give some example like what I have done so far, logistic regression, and KNN. And other hyperparameter of the different model, I'm still working on that. So maybe I will give a more example for my assets. Yeah. And yeah, here is the reference that I cited in the PowerPoint. And thank you for your attention. Do you have any questions?
How do your results compare with the literature?
Compare literature review?
You know, how your results compare with what is out in the literature already?
You mean the difference?
Yeah, you find something different or similar to what is in other papers.
Yeah, to be honest, the majority of the conclusion is the same as what I found in the previous studies. But for my project, I always include some new features, but I haven't finished doing the model hyperparameter tuning. And after doing that, I will give some thoughts like feature importance in the random forest and something like that. And at the time, I can compare with the feature that I use with the other scholars that I use in their paper. Yeah. Any questions? Thank you. Thank you for listening.